Real Story with Fiona Bruce reveals it's all about the money, now on BBC One.
Tonight, lend, more banks behaving badly. The real story of how some lenders sell you loans you can't afford.
You tell them you can't read and write, they still go and let you get it.
The bank staff who say they're being pushed to the limit.
You dream about somebody wanting a loan. There's this constant threat hanging over.
And the bank that helped one woman further into debt.
I went there for help and they've actually sent me out worse off.
Real Story with Fiona Bruce.
Good evening. In Britain, record numbers of us are in debt. And increasingly, some of us are borrowing more, much more, than we can ever repay. Back in May, we reported how one bank, Lloyds TSB, was giving some of its customers large loans without properly checking whether they could afford to pay them back. Since then, hundreds of you have called and emailed us. While most of you were concerned about Lloyds TSB, many of you claimed other banks were also behaving badly. High street banks have dominated our towns and cities for centuries, pillars of the community, respected and trusted for their financial advice.
That's a transfer of £10,000.
But has all that changed? Now, as the banks focus on selling more and more loans, are they putting profits before the interests of customers? And are some of their most vulnerable customers paying a very high price? Peter Burridge was lent money by NatWest despite having learning difficulties. His brother is furious.
The bank has a duty of care and they failed in it, and we have suffered as a consequence.
And Stephen Browning is ill and on benefits. He was lent £100,000 from banks including Barclays and Nationwide.
People need to be aware that these banks and building societies may lend them money when it's not in their best interest to borrow that amount of money.
Lloyds TSB is Britain's biggest lender. We've featured them on Real Story before. But we've uncovered yet more evidence that it regularly makes an ass out of the rules that are meant to govern the lending industry. Remember the Dickersons? David suffers from mental illness, lives on benefits, and doesn't understand finance. Even so, Lloyds TSB lent him a series of loans totalling £100,000.
We can't afford to pay it back. We can pay the mortgage, or we can't pay the loans. We can't pay anything, any of it this back.
All banks have a duty, enshrined in the banking code, not to lend customers more than they can afford. Lloyds TSB had already told us these kind of things can't happen.
From the middle of last year onwards, you would find very different scenarios taking place so that these situations can't happen. These situations can't happen.
Well, they are happening again. We've uncovered yet more cases where Lloyds TSB are giving people huge loans they just can't afford. Peter is recovering from lung cancer. He hasn't worked for 7 years and lives with his wife on £13,000 of benefits a year. Despite this, they've been given a series of loans by Lloyds TSB, which when added together, come to over £100,000. He's so embarrassed by his debt that we've agreed not to identify him and changed his name. How much money have you borrowed over how much time?
Since 2000, it's approaching £100,000.
So 100 grand on an income of £1,000 a month?
Yeah.
And did the bank, Lloyds, ever say to you, how are you going to pay this kind of money back?
No.
On the income you've got?
No.
Peter says he'd been a customer for 16 years at the bank and they knew he was on benefits. He claims he was enticed by unsolicited offers from the bank.
I didn't ask for a loan. We never asked for a loan.
So how did you get the loans?
They always wrote. They always wrote letters saying, you know, if you like to come in, I'm sure we can sort something out.
By last summer, including their credit cards, the couple had borrowed almost £90,000 from Lloyds TSB, and with the interest payments, were struggling to make ends meet. Peter and his wife applied for another loan, but his local branch said no. But not Lloyds TSB online. They came back with a different response. How easy was it to get an online loan?
Or you push a button, you just go like that, push a button and it's there, easy.
And how much was there?
£25,000.
25 grand?
£25,000.
Lloyds TSB knew that with Peter and his wife on benefits, they were in no position to afford the repayments. And they should have known that the loan protection insurance they were offering wasn't ideal, given their circumstances. At the time you took out the insurance, you were already ill.
Yeah.
Which meant that you were not eligible.
Yeah.
You were unemployed.
Yeah.
Which also meant that you weren't eligible.
Yeah.
Lloyds knew this?
Of course they did.
But they still gave you the insurance?
Yeah, because, I mean, as I said, all our money goes or went into that account.
But Lloyds TSB insists that the sale of insurance was appropriate and that elements of the insurance package were still useful. Peter and his wife were facing monthly repayments on their loans of more than £1,000, which nearly matches their entire income. I mean, some people might say, even though the bank perhaps should have asked those questions, you should also be asking those questions of yourself. And I mean, do you blame yourself for the situation you've got yourself in now?
Oh, yeah. Yeah, I mean, in some respects, yeah. I mean, I'm a fool, an idiot. Should never have done it.
Peter knows he's partly to blame for getting into such a mess, but the banking code means Lloyds TSB has a duty to check he could afford the loans.
I think they should have asked me more questions. I think they should have refused me. I think they should have said, no, look, we think that you've got too much. Go away, think about it. Or they should have turned around and said, we can give you a bit of advice as to how you could reduce the payments that you got. Don't give us more money. It just compounds the problem.
In a statement, Lloyds TSB said,
"We are aware that Mr and Mrs Jones have experienced difficulties meeting their repayments and have agreed an affordable repayment plan reducing their monthly payments to £100. We are reviewing all the documentation to ensure that our stringent controls have been followed."
This isn't the first time we found people who've got into difficulties with Lloyds TSB. In previous Real Stories, reporter Paul Kenyon took up the cases of some of the bank's other customers. Remember the Davises of Burton-upon-Trent? They were on disability benefits when they were lent £32,000. They couldn't afford to repay it. But when Real Stories stepped in, the bank cancelled the debt.
There's a letter here that says that the bank has agreed to write off £22,000 worth of debt.
Wow! Oh my, that's good.
And remember the Dickersons from Swansea, who had a series of loans totalling £100,000. We got hold of internal documents which said the bank would struggle to defend a claim of irresponsible lending. When we intervened, the bank acted immediately.
Right. Tell us what's happened then.
They've offered to write off all the unsecured borrowing.
I felt that, everything was, my world was at an end. But now I feel much happier.
Our investigation also unearthed an internal report to senior managers, which revealed that in 1 in 6 cases, it was doubtful whether the bank could prove that the customer could afford the loan they'd been given. The Banking Code Standards Board, the body that regulates the industry, asked to see our leaked documents and promised to launch an investigation.
We would go through the disciplinary process and, if necessary, name them and shame them at the end of the day.
So what do they actually do? Well, we may never know, because the Banking Code Standards Board say the results of their investigation into Lloyds TSB will remain confidential for months and possibly never be published. And they've turned down our request for an interview. Meanwhile, more calls have come into the Real Story office, so we're carrying on with our inquiries. Since our last programme, Real Story's been contacted by more insiders. They've told us that Lloyds TSB is continuing to push loans, sometimes seemingly regardless of whether or not people can actually afford them. And they've told us why it's still going on. One experienced and senior employee contacted us to express his concerns about staff training. He claimed that on one recent course, most account managers were unable to conduct the all-important loan interviews according to the bank's own guidelines. He can't speak openly, so we've used an actor.
The aim of the interview is to get a true picture of the customer's circumstances, what they can afford and what products they really need. It's not happening because the staff simply aren't properly trained. It's common knowledge that there are wholesale omissions being made during interviews. Everything is geared towards the selling of a loan and not necessarily what's in the customer's best interests.
But Lloyds TSB insists staff are properly trained in how to conduct loan interviews. Why is there such a pressure for people to sell these loans?
The banks make so much money out of the associated insurance. Some of these premiums run into many thousands of pounds. It's absolute rip-off. and the banks will take 80% of it in commission. It's a license to print money.
Real Story's been leaked an internal Lloyds TSB report, which assesses the performance of 1,000 account managers. And when you get to the bottom 50 or so that are just falling short of their performance targets, it gets really interesting. While many of them are failing to sell a whole variety of bank products, when it comes to selling loans, they're bang on target. Industry observers claim the performance targets drive staff to concentrate on selling loans, and not always responsibly.
This is what the bank seems to want them to do. They're not actually rogues, but either they don't know what they're missing with customers through lack of training, or they're being bullied into selling as many loans as possible by managers who are themselves under pressure to sell loans.
Real Story decided to put this claim to the test. We sent Lloyds TSB customers with debt problems to 3 managers on the list. 2 were correctly turned down for loans because they'd already borrowed too much. But that wasn't the case for single mum Michelle Ross from Southampton. Her debts mean she already owes more than she can afford to repay. Michelle went to one of the bank's Oxford Street branches in London to ask for advice on getting her finances in order.
I really sort of came in to see what you advised, really, to be honest.
Remember, it's against the banking code to lend more than customers can afford.
You're looking at 7,500 over 5 years.
The advice was the offer of a loan of £7,500, meaning Michelle will have to pay £60 a month more than she does at present, driving her even deeper into debt.
I think it's disgraceful. I'm not shocked. I'm just absolutely disgusted with them because I'm in a really, really bad position. I'm trying to juggle all my money around. I went there for help and they've actually sent me out worse off.
We asked one of the Lloyds TSB whistleblowers to review the footage to see if the interview had been carried out correctly and whether Michelle had been lent too much money.
Repairs, really, but yeah.
You're looking at 7,500 over 5 years. So you're going to be paying £60 more.
As this customer already spends more than she earns, the last thing she needs is to take on more short-term loans. If she took on this loan, she'd probably end up defaulting.
And the Lloyds TSB account manager automatically includes loan insurance.
It's basically going to be £205 a month. That's with insurance
the repayment.
over 5 years, yeah.
The customer is quoted the full cost of the loan, including insurance, but they're not given a comparative quote without insurance. Now, this is pretty standard, if not really ethical practice amongst most lenders.
Lloyds TSB sent us a statement saying,
The meeting was concluded without any specific product details being discussed, given the time constraints imposed by Ms. Ross. Our advisor arranged a second meeting to go through our final checks and review the details of the application. We reject any suggestion that our advisor has acted inappropriately.
We've also discovered that once Lloyds TSB customers have taken out one loan, they then become an even bigger target for the hard sell. The bank will write to them or phone them, offering yet more loans. We were contacted by a worker at one of the bank's debt collection centres. Their role should be to offer advice to customers who are having difficulties meeting their repayments. But they told the staff there are now cold calling other customers to offer them more loans.
The argument was, we'll get these people before they come to the collection centre. You were literally calling them cold and saying, are you having a problem? Then trying to give them more money and trying to sell them insurance at the same time. That's a lot of pressure to put on someone over the phone.
Lloyds TSB says all they're doing is proactively contacting customers as early as possible to help resolve problems before they become unmanageable. But the whistleblower says she wasn't properly trained to sell loans and didn't know customers' full circumstances.
We were offering them extra money, which I really didn't feel I was in any position to do, and certainly not offer them insurance I knew nothing about. With these customers, you don't know their situation. You have very little detail about them.
Lloyds TSB staff say they're victims too of the bank's hard sell culture. We've been contacted by former and current branch managers who say the pressure to meet targets is unbearable.
You wake up in the night thinking, oh my God, where am I going to get customers? And you dream about somebody wanting a loan. There's this constant threat hanging over. If you don't turn an appointment into a loan, you have to answer to your line manager. If you don't sell insurance, you have to fill in a form. I have to report in twice a day. It's never ending.
This internal Lloyds memo, written in May, mentions our previous Real Story programme and says the bank's falling short of its targets on selling loans insurance. So it instructs staff to stay on after work and cold call customers so as to sell more loans.
Very competitive.
The union representing Lloyds TSB staff says some workers are even under pressure from local management to make the calls from their own homes.
We have a concern because many of our members are working a full working week, and then often they're told that they must work additional hours as well. Telemarketing is a priority in many branches, and they find
And that's what ringing people at home, so offering them products from the bank.
That's right, and obviously some staff feel comfortable with that, some don't. Quite often we're finding now that staff are told that they must do telemarketing in the evenings, and sometimes it's not even on a paid basis. Some have even been told that they must make telemarketing calls from home at their own expense. And again, that's an incredible pressure upon staff.
Lloyds TSB say their staff are given the option of working from home, but are paid overtime or given time off in lieu. According to financial experts, Lloyds TSB are not the only bank to put their staff under pressure. How widespread is irresponsible lending in your view?
It's throughout the industry.
So we've focused on Lloyds in a number of our programmes, but it happens in other banks too.
Oh, of course, yes. I mean, Lloyds are unfortunate enough to be in the frame for this one, but the whole industry of unsecured lending is basically driven by this hard pressure selling.
Last month, it seems as if the problem of irresponsible lending had finally hit home with the banks. Lloyds TSB issued a warning of rising bad debt among its customers and said it could hit future profits. Other banks did the same. It comes as no surprise to Real Story. We've had hundreds of customers from a whole range of banks telling us they've been offered loans for far more than they could afford. Now you've got 3 cars here. Stephen Browning from Rugby borrowed more than £100,000 in just 2 months while he was suffering from manic depression. He took out loans from several banks and building societies, including Barclays, Household Bank and Nationwide. In a particularly acute phase of his illness, he went on a spending spree and bought 3 cars. He only ever uses one of them. And how much did this set you back?
That was £4,000.
£4,000?
Yeah.
And that one?
And that was about 3.5.
Every time you come out of the house, you see, what, the trailer, the scooter, your 3 cars,
yeah,
all as a reminder of all this stuff you bought you didn't need. And you've got a horse box as well, haven't you, somewhere?
Yeah, I have, yeah. That's stored somewhere else. I've been trying to get rid of that as well without any joy.
And how much did that cost you?
Over £2,000.
£2 grand?
Yeah.
For a horse box for a horse you didn't have?
Yeah, that's right.
Stephen Browning managed to take out the loans, even though he was out of work and his wife Diana was on benefits. Stephen says he told the banks he was about to start a business and would soon be earning good money. But if the banks had checked, they would have found out that he was in fact living off benefits and the business was just a dream. Can you remember how much you were in debt when you found out, when you finally tallied it, added it all?
It was 100,000 plus.
What did you think?
I was horrified, gobsmacked. I just thought, well, how are we going to get out of this?
I mean, in one sense, Diana, you were lying to the bank by saying that you were earning more than you were.
Mm.
Is it the bank's responsibility to check that out?
Well, yes, I think it is. I think, to be honest, I mean, obviously with this particular illness, Steve was insightless, so whatever he was thinking about at the time, that's what he believed. But yeah, I think any information that you give to a financial company, I think they should agree things in principle and say, right, we need to see the evidence.
Eventually it became apparent that the Brownings were not in a position to pay back the money Stephen had borrowed. The loans had been unsecured and therefore not linked to any of their assets. So it came as a shock when one of the lenders, the Nationwide, went to court and got an order on their house to get back the £7,000 it was owed. Potentially, this could leave the couple homeless.
It set me back, almost back to the beginning of when I was diagnosed. I was really...
Well, it made you ill again?
Made me really ill. I was very shocked.
Nationwide could force the Brownings to sell their home, but they say they never intend to exercise that right and will only claim back their money if and when the couple ever sell up. Unsecured loans are usually slightly more expensive to reflect a bank's increased risk if the borrower defaults. But industry observers are worried that in the small print of some unsecured loans and overdrafts, lenders are adding an extra powerful weapon. How can an unsecured loan become a secured loan? How is that possible?
The banks have a sneaky little clause which goes by the generic name of an all monies clause, but basically what it means is that it allows the bank to take a charge against your property, and that can sweep in any other form of debt that you might have with them. It could be a car loan, it could be credit card debt.
So this is even if you have an unsecured loan?
Yeah.
It actually, when you look at the small print, it means secured.
It does. And you're probably paying a much higher rate to get an unsecured loan. So you're paying a higher rate, and yet it's still secured.
Barclays and Household Bank both say they're committed to responsible lending, but is dependent on the customer supplying accurate information. Household Bank are accepting repayments of £1 a month from the Brownings. Nationwide say they think the charging order was appropriate, since Mr. Browning hasn't made any payments since last August.
We believe in another way. Phones answered.
There may be another way, but it seems staff at NatWest are also under pressure to sell loans. We were contacted by several who told us of the pressure to meet targets, in particular, loan insurance.
I've seen some staff selling loans to people that can't afford them and selling insurance which isn't valid. They will do everything they can to meet their targets because the consequences are so bad.
NatWest sent us a statement saying,
"We do not tolerate any mis-selling of our products. If we become aware of any mis-selling activity, the employee concerned will be disciplined."
Good pressure on staff have led to a loan being given to one customer with learning difficulties who can't read or write. Peter Burridge from Sutton tries to lead an independent life despite his disabilities. He lives on benefits, and his family say he has little understanding of financial affairs.
Peter lives in sheltered accommodation. He finds it difficult to cope in modern society. He finds the stress of holding down a job very difficult.
Peter went to his local branch where he's been a customer for 24 years and asked to have a credit card. He was given one with a £500 limit and also ended up with an £800 loan.
Peter can't read or write, and he must have, well, Peter tells us that he told the person he couldn't read or write, and they had to fill out the application on behalf.
You tell them you can't read and write, they still go and let you get it. I should never have got into that mess.
Jonathan says their elderly parents were devastated when they discovered that Peter was in debt. The money had all gone and he couldn't pay his rent.
I've only seen my mum cry twice. First was when a patient died, and the other time was this. This has put our family through a fair degree of stress. Peter's had to move out of his flat back into sheltered accommodation. My father was certainly physically ill for a period of worry when we first found out about it, and I think that's completely unacceptable. This is the final reply from NatWest.
The family says their distress was made even worse because they had to really fight NatWest before the bank agreed to write off the debt.
I think NatWest have dealt with it appallingly badly. From the outset, we found the branch manager to be dismissive, uninterested, I would actually say obstructive to the complaint.
For the sake of other special needs, that's why I'm going on here to say how I feel, and that they're not going to get away with it.
NatWest say their staff was satisfied that Mr. Burridge understood what he was signing. It was only later that the extent of his learning disability became clear. But they accept that their standards of customer service weren't met in dealing with the Burridge family. Last month, the Banking Code Standards Board, the voluntary body that regulates the lending industry, met to discuss strengthening their voluntary code that's meant to protect customers against inappropriate lending. They say they plan to come up with new measures to put an end to unaffordable loans. With so many cases coming forward now, increasingly campaigns are saying the only answer is a fundamental reform of the way banking is regulated. Some now say the only answer is for the powerful Financial Services Authority to take control of the way loans are sold.
The Financial Services Authority could put in regulation, like they do for mortgages, which sets out the guidelines that the banks have to look at the suitability and the affordability of the loan, which basically means they would have to check out your income and expenditure so closely to make sure you'd be able to afford to pay back the loan. Why they regulate mortgages and then don't regulate consumer loans is is beyond us. It just doesn't make sense.
Perhaps better checks could have stopped another case where NatWest has lent money to a vulnerable person. Jean Ritchie's son Michael suffered from paranoid schizophrenia, and his only income was benefits. Even so, the bank lent him £15,000.
I'm appalled that a bank can lend a vulnerable person like Michael this amount of money and make absolutely no attempt to find out whether he really could afford to pay it back. I think it's absolute dereliction of duty.
The bank says Michael told them he was in advertising, but it appears they didn't check his income or the claim. Mrs. Ritchie says when she told them the truth, the bank ignored her.
At the time he took it out, his plan was to travel abroad and to kill himself. I feel so angry that NatWest were facilitating that. They could have checked so easily and stopped that. And in fact, I actually told NatWest before he had touched the money and before he had gone abroad that he was a very vulnerable person, and I asked them to stop the loan.
Michael disappeared abroad for 6 weeks. The family had no idea where he'd gone and whether he was safe.
The stress of Mike disappearing like that and us not knowing where he was, we spent the whole of last summer totally distraught. We were desperate for news of him.
Michael was hospitalised abroad and returned home. Mrs. Ritchie persuaded NatWest that they'd made an irresponsible loan. The bank agreed to write off the debt. Michael killed himself 6 months later.
All that work and all that care and all that love that went into Michael was thrown into total jeopardy by this cavalier lending of money to him. It meant that he could go away and we could no longer be caring for him, and he wasn't fit to care for himself.
NatWest says they didn't know Michael suffered from any medical problems and couldn't conduct his own financial affairs. They've written off the full loan. Calls are now growing for all the high street banks to listen to the concerns of customers and take responsibility for ensuring they stick to their own code and only lend money to those who can really afford to repay it.
The system doesn't work properly. It doesn't protect vulnerable people.
Best lending practices have gone out of the window in the interest of sales. It's just a question of chucking money at an individual.
I wouldn't like to say that the banks are targeting vulnerable people. I think they're targeting everybody. But when they hit on vulnerable people, they're not taking the appropriate steps to make sure that they don't put those people in appalling situations. It's no good saying that this person applied for a loan and we couldn't see any reason why not. They've got to look for reasons why not.
Tonight, a result for Peter Burridge, the NatWest customer who couldn't read and write. NatWest say that because their usual high standards of customer service were not met when the family made complaint, the bank has agreed to repay their legal fees and pay back any interest and charges. And even better, the bank has agreed to write off the remainder of his debt. If you've a problem with either debt or your lender, sources of help are available via our website, bbc.co.uk/real story. Or there's a BBC action line, 0800 068 0133. Calls are free and confidential, and the lines are open 7:30 a.m. until midnight. And that's all for this week. Until next Monday at 7:30. Bye-bye. Next week, the pain in Spain, the real story of the British expats who found misery abroad.